We are joined this time around by Oliver Sloup. He's with Blue Line Futures, and he's located in Chicago. And he joins us right now as we get ready to, well, see what USDA has to say about the production in the U.S., also in South America. Do you think they'll go out on much of a limb to change South American production numbers?
You know, I'm not really expecting this report today to pack a whole lot of a punch relative to what we saw at the end of the quarter. That one is historically a little bit draws a bigger reaction, so to speak, from the market. And I think the market will digest this information today rather quickly and move past it. There's a lot going on, obviously, with weather that continues to be front and foremost here going forward. And when we look at what we've priced in over the last week, I think a lot of good news is priced into this market. We sold off pretty darn hard last week. We saw corn and beans down about 62 cents for corn and down 69 cents for soybeans. So I wouldn't be surprised to see the market retrace some of those breakdown points, especially if we get a friendly USDA report. If we can get November beans back above 13.50 with a friendly number today, I wouldn't be surprised to see that gap get filled and maybe make a run closer towards that psychologically significant $14 handle.
Okay, so November right now, it's trading 16 3/4 higher. We're at 13.46 per bushel. And kind of coming back here today. On the corn market, you have December now currently trading at, excuse me, 525.5. That would be up 8.5 cents. Now, on the wheat, Oliver, is this harvest pressure that we're looking at on the wheat today? We have Chicago. It was a little lower. Now it's a little higher. We're 2 3/4 higher at 617 3/4. However, on the Kansas City market, we checked earlier, it was down, 4 to 5 cents, something like that. Right now, we're down just fractionally at 593 1/4. But spring wheat in Minneapolis today, leading the way once again. September now 11 1/4 higher at 825.5. I imagine that is the drought.
Yeah, that's absolutely it. And if you want to be bullish wheat, spring wheat is obviously the place to be. If you're bearish wheat, you're probably looking at Chicago, where the path of least resistance has been lower for the better part of the last 2 months. And I wouldn't be surprised to see that continue going forward. We are a little bit oversold here in the very near term, so potentially we get a relief rally. But I wouldn't be surprised to see that September Chicago contract break and close back below $6 sometime in the next couple of weeks.
When do you think harvest pressure will be behind us?
A lot of people hoping that that comes sooner rather than later. I would imagine here within the next couple of weeks that starts to kind of get priced in and baked into the cake.